Good morning, Abby. How are you?
I'm fine, David. How are you?
Hey, I'm doing wonderful. Doing
Great.
wonderful. Hey, today I've got Abby Pensack here again, one of my favorite, most favorite insurance agents that's out. So today we're going to be talking about something that is very important. I guess if you don't know, September is Life Insurance Awareness Month. And I've got Abby here, and Abby's going to answer a few questions that I have, and maybe some of the people that listen to this, maybe they'll have as well. So first of all, I'm going to introduce Abby. Abby is a independent insurance broker with Abby Insurance, Abby Pensack Insurance, excuse me. And we're going to turn it over to Abby, and then you can explain a little bit about yourself for people that don't know you, and then we'll kick it back to me, and then I'm going to ask you about 4 different questions, probably take us 10, 12 minutes total. So hang
Sounds
with
great.
us.
Okay, well, that's great. So as David said, I'm Abby Pensack, and my company is Abby Pensack Insurance. I specialize in life insurance, long-term care insurance, disability insurance, and Medicare supplements, which is a pretty well-rounded portfolio of helping in the insurance sector. September happens to be Life Insurance Awareness Month, so David and I thought it might be good to answer some questions, clarify some misconceptions, and show the benefits of what life insurance can do for just about everybody.
Perfect. Okay, Abby, let's start off with a couple questions that I have.
Mhm.
And why is life insurance so important anyway?
Well, the number one reason why people think of life insurance is for a death benefit. So if you were to pass and had children, a mortgage, a wife, you don't leave them destitute, because they actually have a method of valuing your life in dollars, which sounds cold, but if you're a 35-year-old dad with 2 kids and a wife and a mortgage, and you're making a certain amount of money, your value of earning is calculated. And it could be easily $1 million if you're going to live to 75 and you're 35. So the first thing, of course, is to protect families. But there's a lot of other things that life insurance does other than a death benefit. So if I can, let me just briefly explain. There are basically 3 types of life insurance products out there. One is term life, and that is the least expensive. It goes for a 10-year term, 20, 30-year term. You pick an amount, a death benefit, and that's it. It doesn't accumulate cash value. It does not do anything except for when you pass, if you're within the term, it will pay your beneficiaries that amount of money. And it can be anywhere from $50,000 to $5 million, just depends on what you need. Then there are other ones that are permanent life insurance products, and one is a universal product and one is a whole life. And both of those are insurance products that get cash accumulation. They have tax-free benefits. Well, first of all life insurance proceeds are tax-free, so there's no taxable event. But with the universal life and whole life, there's not just a tax benefit in the proceeds if you were to pass, but
Mm-hmm.
there's cash accumulation that is either tied to an indice like the S&P, or it has a fixed interest rate. And what happens with those plans is that, for example, with a whole life, whole life is the most expensive. It's sort of like a Cadillac of insurance.
Mm-hmm.
It's very good to buy when you're young, because what it does is it accumulates cash value. Eventually, it pays for itself. You will get dividends. The dividends will pay the premiums. Sometimes the premiums get paid up after a certain amount of time. And then there's universal life, which is a newer product that gives people flexibility. So if whole life is what you purchase and your premium is $2,000 a year,
Mm-hmm.
you have to pay $2,000 a year. You can't pay more, you can't pay less. With universal life, you can overpay to a certain amount within the tax laws. And if, something happens like COVID and you lose your job for 6 months and it's like, the last thing I need to do is pay this premium, you can not pay the premium for a limited amount of time. If you don't pay the premium for a long time, it goes away. But then the money that accumulates is yours to use. And you can borrow against it. You have a daughter who's getting married. You need to get your hands on $20,000, $30,000 for a wedding. You can do it. Kids' tuition comes up, you can grab it. It's your money. And you can cash out of the policy. A lot of folks who have those permanent products, as they get older and no longer need the life insurance, their homes are paid, their kids are out of college, they've got assets, will take that cash and transfer it tax-free into something else that could be a long-term care product or all kinds of things. So it has a lot of moving parts. And it is something that you can buy for your newborn baby, or you can buy on your business partner so that if something were to happen to them, you're not married to the partner's wife, for example. So, it does an awful lot.
Okay. So, so Abby, my second question would be, so as the market has changed, and if you really think about change since probably 15, 20 years, the market's really changed as far as insurance and the things that are allowed, the different types of products that are in the market. What does that look like today as far, because most people think, and when I say most people, I think most people today think insurance is boring. It's insurance. If you die, you get paid. And it's really not, that's really not the fact today.
Right. What newer policies have, and what newer policies have are riders that will give you a long-term care benefit, which was never heard of 20 years ago. So you put on a rider like that, and if you need long-term care, you can get long-term care from the cash value of your life insurance. So that's a really great thing. There are more tax advantages. I can't think of anything else. But there's always a waiver. There's a waiver of premium you can purchase. So there's all kinds of different riders, and you can pick with permanent insurance, like a universal policy. You can pick the stock market or the or NASDAQ or any kind of investment, and if the market were to go down, you're not going to lose anything. But if the market goes up,
right,
your premium will exponentially increase your cash value.
Right. I think the reason that's so important is the older you get, the more you look at your risk and how vulnerable you are on different things. Especially, we'll say, I don't want to talk about COVID every time we talk, but it seems like it always comes up. And if you really think about it, there's so many issues. And really, when you think about life insurance, it's not just about life insurance. You truly have to do a workup on everybody and find out where they are, because so you think, oh, I've got X amount of dollars for life insurance. And then you find out that you get sick. And then that life insurance goes away because you have to liquefy and get that money out to do something else with it. And
right.
It's scary. So really, like, we're playing like Stratego really with all this, because if you're not covered and stuff happens, which it does.
Well, that's why many people get a waiver of premium rider. So that means if you can't, if you have an illness, you can't you don't have to pay your premium. There's also an acceleration of benefits, which is, it's a little morose, but it's more morose when you leave your wife and children with no money. So that being said, there's also an accelerated death benefit. So if, God forbid, you've got 12 months to live, you can access your life insurance then, because you might need it. You might need to, go into a facility or travel to different physicians and hospitals and such. So, if we want to do a deep dive, or if folks want to, they should give me a call, because, as we've talked to before, every individual is an individual. Every client is different.
That's right.
Everybody has a different value system, a different risk system, so it,
Yeah.
we always work around what is best for the individual, and I just help them navigate what might be good for them.
Right.
Um,
And that
I do,
changes too.
mhm,
And that
yeah.
changes as well, because what's good for David Gray today might
Mhm,
be this, and then in 5 years might not be the same. Let me tell you a quick story. I had a friend one time that knew that I was, in the insurance business in IT, not a insurance specialist like you are, and
mhm.
knowing all the moving parts. This guy tells me that, hey, I can go online and buy all the insurance I want. And I was like, you know what? You sure can. And you know what? You might get it a couple dollars cheaper. But guess what? What you can't get is the knowledge of somebody knowing that, do you have long-term care insurance? Do you have this? Do you have that?
Mhm.
What are your safety nets on if something does happen? Then what you've just bought is going to go away. Most
Well,
likely it's going to go away.
yeah, I mean, when I talk to a client, we can talk about if you just want to look at price alone. If you want to look at price alone and you don't want any bells and whistles, we can have a pared down term policy that'll just cover, the essentials that you need to provide for your family or your student loans or whatever the case may be. But it's also nice to have someone. I don't think if you call a toll-free number, they're going to tell you about a term life insurance policy, for example, that I sell a lot of, which has the potential to peel away the onion, so to
Mm-hmm.
speak. So take a young family, and they're young family, 2 kids, they don't have a lot of money.
Mm-hmm.
Dad buys $1 million term life policy, but he buys a rider so that he can take parts of that slowly, $100,000 at a time or whatever, and turn that into permanent insurance. I don't think you're going to get that from a toll-free number
No.
from somebody in God knows where.
No, and plus, I tell you what, just like most people today, you're used to taking your car to one mechanic. Your mechanic knows your car. You're used to going to one doctor, not 10 doctors. And the reason you do that is the time that you need it and you go in to see that doctor, you want that doctor to be familiar enough with you through a chart, through the information that he's gained, not somebody else, and not just an educated guess that could be 180 degrees out. But you want to know
Absolutely.
exactly what you are.
Well, that's completely right. And when you deal with a broker, I have access to all the insurance companies. So, I'm looking out for what's best for my client. I'm not stuck with, I won't use any particular names, but, some of these major insurance companies where those agents really just sell that product.
Right.
And I'm sure they're fine products, but it's nicer to see what your options are. And the market changes all the time.
Mm-hmm.
One of the most important things is the all famous policy review, because I know that before I was in this industry, I bought some insurance, and just like many people, bought it from a trusted advisor, stuck it in my drawer, never looked at it again,
Mm-hmm.
and never had them call me with a policy review. And then when I got into the insurance business and I could understand really take a deep dive,
Mm-hmm.
I needed to have this looked at because it was based on a universal life policy that needed some more money put at it. That would have been fine if had someone told me. And if I didn't take action myself, my universal life policy would have imploded to nothing when I needed it. At 80 years old, it would turn to
Mm-hmm.
zero.
Mm-hmm.
No one told me that.
Yeah.
And I think that's, it's not a good way to run a business.
Right.
So what you do is, and the thing that's nice about life insurance is you deal with families as they get, as life goes on.
Mm-hmm.
So, they have their first house, and then they have a kid, and then maybe the grandparents. There's a lovely thing where grandparents will buy life insurance for their grandchildren, because I did that for my kids and when they were little, and they're accumulating cash value in their policies, first of all. Second of all, it locked in their health, because the bane of any insurance agent's existence is underwriting and the health of their clients. You can have all the money in the world, but if you don't have the health, you can't buy it.
Right.
So if you get it for, I think I got it when my kids were like 5 and 7, it locked in their health. So, and they have a policy that they can have a guaranteed increase option. So every few years, it goes up another $50,000. as a parent, many of us pay the premium,
Hmm.
but eventually, when they're getting on their feet, I'm going to hand it to them and say, this is for you. And,
Hmm.
you take care of it. But it's a wonderful thing,
Yeah.
because they're going to need money. Maybe they'll need to grab up, 10, 20, 30, $40,000 to make that 20% down on their house, or to build a nursery for their first baby.
Hmm.
So it does a lot. I mean, it's a very intimate conversation.
Yeah. Abby, that brings me to 2 points that I had. And exactly just like you talked about. The first one would be the point of look at your policy or your annual review, or just a insurance review. It might be somebody that's not one of your clients that you actually have to dig down and see exactly what they have.
I've done
So
that.
yeah, so if you look at that, you know what? How many people go and get a complete physical today and then wait 15 years to go get another one?
Yeah, and
That's
they may
why.
not be in such good
That's
shape.
right, right, exactly. So that would be like the first thing that comes to my mind to think about. The second,
Oh, yeah,
go ahead.
absolutely. And I have done policy reviews on people that were not my clients, but they were associates or friends or
Hmm.
prospective clients. And if they've got a great policy, you just tell them, good for you, you did the right thing, that's wonderful. But I have also found where they're overpaying, the policy they have is old and it doesn't have all the bells and whistles, and we can just transfer that into a different policy. So you really want a trusted advisor.
Right. Right. The second thing that you brought up, which is very interesting, and if you think about it, so being a parent, especially being a grandparent, if you think about it, you know what? You're constantly giving your kids, your grandkids, gifts and stuff like that. Whether you're graduating, or they're graduating from high school, or they've, just won something, a sporting event or something, you're always giving them something. Like,
Oh yeah,
I
yeah.
can see that now being a huge thing where you could actually gift or give a gift that's insurance or policy related.
Oh yeah. I
So,
mean, actually, there's this. I don't know if it's a registered trademark, but there's one company, and it might be just a standard expression, but it's called gift of a lifetime.
hmm.
And grandparents definitely buy this for their grandkids, and it's a wonderful thing. I
How
mean,
smart is that?
it's
How smart
brilliant.
is that?
It's brilliant.
Yeah.
It's brilliant, because I mean, those kids will be able to get their hands on the cash value if they need to. They want to go to graduate school, whatever
Hmm.
the case may be.
Yeah.
Yeah.
Yeah. I know a grandparent one time that gave their grandchild $1,000 for graduation. This is for your senior trip. You go do what you want to do. And you know
Hmm.
what? Hey, that's great. Next week, the $1,000 is probably gone. You take that,
Right.
throw it in some type of policy, it lasts forever,
Yeah, but those
or
kids are
till
still going to
needed.
want to. They're still going to want to take a trip, so you might have to put 500 in the
I
policy
know, I
and
know.
500 for Cancun,
There's
because
there's
you know.
there's a way to work that out, though. I'm sure. I'm
Yeah,
sure.
yeah,
Let's
yeah.
see. We've already talked about tax advantages for life insurance and stuff like that. Abby, I think that's about all I have for you today.
Well, if anyone would like to have a policy review, talk to me. There's a no obligation. I'm happy to help have a conversation. I mean, I get as much pleasure from selling a policy as I see that someone has something that's perfect for them. It's
Hmm.
the right thing, and they've done the right thing. It's almost like with a physician, do no harm.
That's
So
right. That's
yeah,
right.
so folks shouldn't be afraid to look and maybe get a second set of eyes. And
Right.
if you haven't heard from your insurance agent in a year,
Right.
you might want to think about, you know, giving them a little kick in the pants or
That's
looking
right.
for somebody else.
That's right. Awesome.
Yeah.
Well, Abby, hey, thank you once again. I appreciate your time. And until next time, we'll do it again.
Okay. Thanks, Dave. You take care.
Thank you.
Appreciate it. Bye.
Bye.